Bitcoin's experienced its worst drop since the FTX scandal, down nearly 11%. People are trying to make sense of the madness. Oh, it's all because of the high interest rates. Oh, it's because SpaceX got rid of their cryptocurrency. Oh, now we got the Grayscale versus the SEC story coming up into fruition. We've now even got the SEC appealing to the fact that the Ripple case is now... Look, it's starting to get a little bit messy. But human nature says that we need to see this drop. Word on the street says, is it going to be a short squeeze, or is Bitcoin going to continue to drop even further? Well, I'm going to be bringing you back to an old video that I did talking about my market crash theory and how we can use that information to effectively determine how likely the marketplace is going to react in the near future. Now, we've got a lot of news coming out this week, mainly focused on the manufacturing sector in the US, in the Euro, and good old Jerome Powell is going to have a conversation and let us know about what his plan is. We know he's going to increase the interest rates. Tell me something new. Surprise, surprise, mother. So let's align ourselves with the idea that this move to the downside is now starting to absorb what's really happening in the economy. So we know interest rates are high. We know they're going to increase them yet again. We've got more of a volatile week coming into crypto and the legacy markets because we've got Powell speaking, we've got data from the manufacturing sector. You only need to go into the calendar to check that bad boy out. Tuesday, we don't really have nothing happening. The BRICS summit is currently getting ready to go underway, but it's on Wednesday when the Eurozone and then, of course, the Euro and the dollar itself actually declare information about the manufacturing sector. Now, if the manufacturing sector itself is showing a contraction, where there's a slowdown and companies aren't receiving the orders, that tells us that the economy is starting to slow down. That means less people are going to be spending money, which in principle is what the Federal Reserve wants. It wants people to not spend so much money. But you've got a strong labor market, which is going to fuel the idea that inflation could still continue to move up. Now, they say that we're not in a recession. Well, Netherlands is in a recession, but the US seems to be moving the goalpost continuously. They ain't going to be accepting it yet. Now, there are a number of things that are going to be unfolding this week. We've also got the idea that Nvidia is going to be declaring its earnings, and that bad boy will be on the 23rd of August. We have a look at where the market currently is at, and you can see it says here that the current outlook is market is in a correction. Now, if you remember, just before I made tracks to go to Cyprus, we were talking about the idea that the NASDAQ and the S&P had been collectively building up distribution days. What do I mean by that? Check this out. If you look to the bottom right of the chart, you can see that we've got the NASDAQ's volume. Now, this red line here just tells us what the average is over the last 50 days. Now, these pink volume bars right here is where investors or institutional traders, investors, are all selling. So it shows here that NASDAQ had collectively built 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 days where they had been distributing. So stocks were being sold off over the last 2 weeks. Okay? We can see that is evident how the sell-off starts when prices are moving up, because that's what they do. Smart money sells as prices moving higher. Notice the bigger volumes happen as prices are moving up. Then when retail steps in and says, you know what, I'm missing out on the move to the upside, they start buying, and that's when you start seeing the buildup of distribution days coming into play. Now, when you've got a market that's trending upwards and there is a collection of distribution days, it can lead to pressure on the market's uptrend, which is why now it is deemed that the market is in correction mode, according to Market Smith. Now, this is just a gauge to help you understand where we are collectively in the marketplace. But we've effectively been waiting for this bad boy to unfold. Let me show you what I mean before I get into Bitcoin's price action. Let's make our way over to the S&P. And this goes in line with my market crash theory that we spoke about not so long ago. If I zoom out on this chart, you can see that I've got several levels on the S&P. Now, we go back to this video right here where I'm talking about the idea that the S&P could be getting prepared for a drop to the downside. On what basis? Well, during this video right here, it's called It's All One Big Trap. And in this video, I'm going to talk about why 2007, 2008 is sort of being repeated. Maybe not literally in the sense of the financial collapse. Well, they're all throwing out the idea that this is going to be one big market crash, because back then we didn't have the issue of high interest rates. All we had was a liquidity issue, which effectively involved Lehman Brothers going bankrupt. Then, of course, the US government stepped in and pumped in a nice $700 billion bill to save the economy. But let's just go back into the chart for the S&P, and you can see that one of our levels at 4,636 has been tapped by the S&P, which effectively reversed from that point. We go into the actual previous chart and you can see bright as day what we've got going off right here. So look, if we go and look right there, 4,637. So I may have marked it off a little bit off there. But the story of this move here is the following. Go back into 2007, 2008 subprime mortgage crisis. That puts us inside of this area right here. Now, if we look closely, you can see that this run up towards the subprime mortgage crisis, once it was declared and things were starting to get, a little bit of a problem, there's a bit of an issue. It was inside this area here where people were dismissive of it. They didn't think it was a problem, okay? This is usually what happens. The market kind of sets up the trap, because if they think the market's going to continue higher, then everyone's going to start running into the marketplace because they feel like they're going to be missing out on the S&P making a new high. Now, you can see bright as day that the S&P did make a new high for that year, and it got enough people committed, which at this point, oil was flying up, which is not a good sign, because if investors start turning to commodities, it means that they are seeking the safety. During this time, oil flew up to $150 a barrel. And then, of course, they just collapsed it nonstop. It just dropped so aggressively to the point where the market effectively turned in February 2009, which then started one of the biggest moves to the upside. And it hasn't stopped ever since. Okay? What I'm trying to say to you guys is, are we effectively at that point where people are in denial about this market run to the upside? In other words, are they expecting things to turn and be better for the economy? Do they care about interest rates? Does the market even bother with the fact that the yields themselves are inverted so aggressively, the longest they've been inverted for in a very long time? People are dismissing what's going on. And again, we have not yet seen the impact of interest rates. So now we take that information and then say, okay, then how does that affect Bitcoin? Well, let's just go into Bitcoin. Now, remember, Bitcoin is a small asset in comparison to the euro, to the S&P, to the NASDAQ, and even Amazon, okay? Amazon, just under $2 trillion, well, just over $2 trillion market cap. You got Nvidia, over $1 trillion market cap. Nvidia's a stock, bro. All right? Cryptocurrency ain't even above $1 trillion anymore, or just about. So what I'm trying to say to you is that means Bitcoin is prone to more volatility. It's evident that Bitcoin is following the legacy markets. Now, the sooner Bitcoin comes away from that logic, the more that we're going to be believing that Bitcoin can continue higher on its own accord. But we got to wake up. We've got to realize that Bitcoin, from a technical point of view, has got a few more imbalances that we would be expecting them to move down towards. You've got this area right here on Bitcoin, which sits roughly around, where is it? Here we go. We've got the 23,976 zone. That is one important area in Bitcoin, because if they tap that region, they will then flush the liquidity all the way down towards the 20,474. Now, a lot of people, when Bitcoin made the move up towards the 31,000, they were saying that Bitcoin will never go to certain areas. Okay, Bitcoin will break 30 and it won't stop. We are now at 26,037. So that kind of puts that in the bin, okay? But we will only need to react to Bitcoin when it gets to specific points. So the next question is now a good time to buy it? In my opinion, no. Why? Because there's still too much of a reaction to hit the marketplace. Now, we can look at it from this perspective. We can say, okay, From a macro point of view, where's money going right now? Well, ladies and gentlemen, that is evident that money is going into dollar. That is obvious. You can see bright as day. Let me get rid of all of this madness right here for you. You can see that dollar is showing signs of climbing back up, okay? Because they're increasing the interest rates. As they increase interest rates, they are naturally going to be encouraging foreign investors to step in and get US-based assets or the dollar itself, because they're going to generate a return. So there's going to be financial instruments that they can utilize and take advantage of higher interest rates. That's no good if you're a euro trader, because that means that euro is going to go down. Well, you can short it, but it's no good if you're a holder of euro. You're then naturally going to want to conduct your business in the US dollar. Same with the pound. The US now declaring that they're going to increase the interest rates even more is only going to encourage foreign investors to step in. That means assets against the US dollar will go down. That means Bitcoin too. So we then look at it again and we say to ourselves, well, is now a good time to buy Bitcoin? Well, my holders, you guys, you effectively don't care. In principle, you shouldn't care what Bitcoin's price is. You're just about picking it up as cheap as possible. Now, I get that. But what about the guy that may think, you know what? What if I buy Bitcoin now? What if it drops even further? I could get a better feel. Well, we can't be worrying about Bitcoin going back up just yet if we take the logic that the market is going to be reacting to these changes in the macro. Now, we have got a big imbalance in the chart on Bitcoin right now, as you can see on the vector candle. You've got this red vector candle spike lower, and then this next one coming into play, which hasn't actually broken down. And again, if they break this range at the 24,816, then it's going to be setting up Bitcoin to come and attack the liquidity inside of this zone, well, in this zone, which will then start freeing up all these liquidation points that sit between 23,976 and 20,474. I ain't even going to show you the liquidity on the 6-month chart, because right now Bitcoin is trading very close towards the 24,300 with roughly around $180 billion worth of long liquidations. Remember, behind those long liquidations, there is an order for those longs to be triggered as a sell, and the only person that can equate or facilitate the same liquidity to match retail is Mr. Market Maker. So there is right now $180 billion worth of sell orders matched up to the retail trader who has gone long, and he set his liquidation point to be at 24,300. So we've got to now say to ourselves, is Market Maker going to keep his liquidity stacked in that zone? It's payday for him in that zone, ladies and gentlemen. Payday. And if they drop Bitcoin today towards that zone, my days, not a bad day for Mr. Market Maker, picking up $180 billion. That seems like a decent day in the eyes of Market Maker. Going back into the logic of Bitcoin's price action, we do have this red vector candle, which does suggest that there is an imbalance. The issue that we have got is this. Bitcoin moved away with this green vector candle and stayed away from that zone until it collectively started to roll over. We've now had the break of the 50 EMA, the 800 and the 200 EMA. So those zones right now are no longer points of interest for us. Why? Because they can only now be points of resistance. The liquidity is further down. Now, some of you are like, yo, Bitcoin's going back up. It's going up. I hope it does. But Bitcoin is following the narrative of the markets, the S&P, the NASDAQ. If our market crash theory does come into fruition, ladies and gentlemen, then the S&P is going to take a slump down to 3,600. Remember, the S&P is up nearly 20%. The NASDAQ is up nearly 39%, okay, from its high. So we've got to think, how many stocks out there are currently smashing it? Well, look, the biggest leader, in my opinion, let me just bring it up for you now. The main player is Nvidia, okay? A lot of money has gone into Nvidia. And there's a gap right there in Nvidia that we need to be very careful of. And their news announcements that is coming out very soon on the 23rd of August. News announcements. We're going to know if Nvidia is actually doing well with its AI division in terms of offering cloud services and all of the other bits and bobs that it likes to do. Logic says that, in my opinion, Nvidia is going to be the only reason why assets across the board will start to come back up if these guys hit their estimates and above. It has to be above the estimates. If not, the market will react aggressively. And that could lead to more downside movement. But again, if you're a Bitcoin trader or if you're a Bitcoin holder, it's now cheaper for you to pick up Bitcoin. You're damn right it is. It is cheaper. Now, hopefully Bitcoin can hold inside of this range, and that's for my holders. You've got lots of time to effectively work out whether Bitcoin is going to move up or down. We just need to see how Bitcoin behaves throughout the rest of this week, and we know Powell speaking on Friday is going to be the deciding factor. Now, if you are new to the channel, Will Smith, the button, like, subscribe, you know what the story is. Get over to Traders Reality website. There is a free course on there helping you how to understand the hybrid system. There's lots and lots of people have taken it already, getting good feedback from everyone about it. But if you are new, go and check that bad boy out. You can become a member on the website. It's free to do so. And if you want to learn more about the hybrid system, get with the Patreon, because that's where I update the patrons daily on day trading opportunities to look out for in Bitcoin, Ethereum, Forex markets, and the NASDAQ and the S&P. As we come to a close, ladies and gentlemen, just put it into perspective. We haven't yet seen the reaction to high interest rates yet. We're going to know if Nvidia is going to be the deciding factor about whether this market is going to move back up again. And the drop to the downside has only been put in place to effectively load up more longs to then see price go back up again. It's all on Nvidia, in my opinion, because if NASDAQ moves up, S&P moves up, Bitcoin moves up. Mad love and respect, ladies and gentlemen, and I'll check in with you tomorrow. Peace.